Yes, welcome. What I wanted to get into today, since I've seen a lot of people talk about this with the Bitcoin cycle going on, people have been talking about Wyckoff and the distribution and accumulation pattern on the Bitcoin chart and what that might look like. So I wanted to just dive into that shortly today and play out the different scenarios that are forming on the chart rather, and see what the probability of each might be and what it may look like. So if you guys don't know anything about the Wyckoff distribution and the Wyckoff patterns, then I'll just dive into it shortly here. So this is the general Wyckoff pattern, right? This is the accumulation pattern in the Wyckoff phases. So essentially what this looks like is, or what it entails, is that smart money is accumulating in this range. That essentially means that they are buying, and that often happens at the lower bound of the range. So they're buying at these points. They're not buying at the top of the range. So essentially how they do that is, since they have a lot more money than the general retail purchasers, you will see them purchasing down here, creating these up moves, right? So they create these up moves by purchasing in this zone, and once it reaches the top half, or the top of the range, you see them stopping buying, right? So they don't buy anymore. So here they don't buy, here they don't buy, but here they do buy in the bottom of the range. So essentially what this means is they accumulate in this and manipulate the money supply by making it seem like there's a lot of support and bullishness at the bottom half of this accumulation range, and then postponing buying at the top half, meaning that only retail is pushing up the price here, and slowly retail gives up because nothing's happening, and if it's necessary, you'll even see them shorting the position up here, and retail will slowly see the range and decide to stop buying, and that's when slowly it enters back into their buy zone and they buy, and eventually during the D, or the fourth period of the cycle, you see a buy up with continuous highs often occurring after a spring. So a spring essentially means a bear trap. It's the same thing. It's everybody's shorting, and here a lot more bears stack in to try to get short positions, and that ends up faking it out and going to the upside. At the end of the cycle, what you often see is you'll see this buy up, constant buy up with constant lower lows, or higher lows rather. And that essentially shows that there is just a lack of supply and a constant demand to get out of the zone from the smart money or the big purchasers. So that's essentially the accumulation phase. I'll do a separate video on the distribution phase of Wyckoff, just to get that out of the way as well. So usually when you get into this accumulation zone, when you get into this accumulation zone, you get a strong sell-off into an automatic reaction. The automatic reaction is, once it's sold off so extremely, the automatic reaction is this rally. Usually, the automatic reaction, the top of this Wyckoff accumulation pattern, will be the top of the range, and sometimes you see it break over this, as you see here, and that is the next top of the range. Now, this usually becomes the support zone, the pinnacle of the capitulation usually becomes the support zone. So what you see from here is, you see that this range is formed, and you see the spring, so a bear trap that usually forms the final ending of the accumulation zone into new highs, and then eventually the distribution. So how can we print this entire thing onto the Bitcoin chart? Well, there's numerous scenarios in which this can play out, and we might already have seen it play out. So first, we're going to go into the bullish case, so to speak. Either way is bullish, but we will be looking at the accumulation phase from the Wyckoff patterns already happened or is already ending, and we already had the spring and are currently in the signs of strength phase, in the D and E phase, out of which we see the new highs. Now, of course, in my personal opinion, this is all still extremely dependent on macroeconomic scenarios and the broader stock market and the broader markets in general, which means it is a bit difficult to gauge whether the pattern is already happening, although that's why I'm pointing out different scenarios of accumulation that we may be seeing or may not be seeing. And I will personally put my opinion out there as well during this video, so we'll continue here. So let's dive into the probability or the chance that we have already had the entire phase. And by the entire phase, I mean the ending in the spring already had, because usually the spring is the final thing that occurs before we get signs of strength and a real uptrend. Signs of strength is this, and essentially that means we closed or finally broke these highs, also the automatic reaction highs, but also the general highs. So just keep that in mind, that the spring usually happens, and the signs of strength, and which are often the indication of breaking out of the entire accumulation zone, usually means that the accumulation zone is over. So keep those two things in mind: the spring and the signs of strength over the automatic reaction and general range highs. So getting that out of the way, you first have the drop down. As you can see on Bitcoin, everybody knows we've had the drop down, right? So I'll do this one, and I'll make this temporarily red, right? And now what you could say is usually after this, after the drop, you get the general zone, the low, which forms the support, which we can see here. The low has formed the support, continuous support at here 19K, right? And then we have the automatic reaction, which forms the general resistance. Perfect, right? This is a resistance we've never quite tested, and the automatic reaction has not yet been broken in this particular case, but we will continue drawing the boxes for now. So this is then the accumulation. This would be the, so to speak, oh shit zone, or the lows, or the spring. And then this is where we see signs of strength. Now, arguably, we'll draw this one out. Arguably, we have seen in this red box, we have seen the spring, and now we can see the signs of strength by the breaking of these highs and these highs. Although, as you can see in Wyckoff, the automatic reaction highs is one thing, the general highs of the range of accumulation that has formed is another. Now, in this specific case, we do not see these highs, and these are the automatic reaction highs, right? These have not broken. So if we can see a break above 25,000, we officially, by all measures, have signs of strength, and then can see this going up to new highs and eventually creating a new distribution zone, and the Wyckoff structure has finished and has done its thing. Now, let's play out another scenario, which to me is the more likely scenario. Just going to remove these drawings for when we come back to this, and we will also remove this. So first, I want to show you guys the 2017 case. Similarly, we had here a support, just as we had here. The support at 32K, as you can see, it's a long-term support which we broke, and that was the final capitulation into the possible lows, which created the automatic reaction. Excuse me. And then what I would want to show here is the 2017 case. Now, they're not colored in this case, but you can see the drop out of the support zone, creating the automatic reaction, which is up to here, which formed the resistance, the top of the zone. Now, in this specific case, we do not see a proper capitulation below the lows, right? So we do not see this spring, right? We don't actually have a spring. Now, you could argue that we had a support here, the lows, automatic reaction, support, 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 spring, support, and we rise up. Similarly to Wyckoff, you can see here this continued buying up of price, right? Discontinued, and although the trend line isn't perfect, it's more about the idea of a low, higher low, higher low, higher low, higher low, meaning that accumulation is taking place and there's no real supply of these lows. Similarly to, not quite on this chart, but we could certainly see the same thing happening. A low, higher low, higher low, higher low, and now the final liftoff. Similarly, on Wyckoff, we can see the low. We really need to get rid of all this. We see the low, higher low, higher low. We'll just higher low, higher low, higher low, higher low, higher low, higher low, and then the liftoff. Now, we see that currently as well, as I just drew out over here. Although, for this reason, in general, we can look at the 2017 pattern and we can see a similar thing occurring. Although, in this case, again, there's no real spring. We could argue this is the spring, and we could definitely also argue against that maybe this time there was no spring, there was just accumulation within the Wyckoff accumulation pattern. Finally, we can play this out. We can play out the low here, automatic reaction, right? So AR, I'm bad at drawing on this, but it's fine, right? The low, capitulation, automatic reaction, and this generally has formed support. We could say this is the low, this will be the automatic reaction. I genuinely believe this is the automatic reaction and that this just is imperfect, and that is all okay. Nothing has to be perfect in this. It's a game of probabilities and it's a game of seeing how things play out. A lot of the time, things don't play out perfectly, but they are very close to how they usually want to play out. But in this specific case, which is a more long-term option, we still visit these support areas everywhere from 10 to 9K, which is what a lot of people are looking for. And we get the accumulation zone, then we get the spring. Now, the spring might be shorter. In fact, this might just be like this, creating a proper spring that isn't particularly long-term, and which would entail a quicker bounce out of the 8 to 12K zone, which seems likely in light of the entire community not wanting these lows and quite possibly never seeing these lows for that reason, since there's so many bid orders everywhere from 14 to 10K. Generally, if this is the Wyckoff accumulation pattern we are seeing, then we can certainly say that we have time to play out the macroeconomic conditions in which we currently live and see how that really goes. We have time to get proper accumulation, and we get more time until the 2024 halving cycle, which is often a reason for big time accumulation and a big rally. So I personally would not be surprised to see the accumulation continue, and this being the entire range, rather than this being, as we stated here, the first or only spring after which we see the rise. My opinion can quickly change if we see a break of this high at 25,000 of this automatic reaction. If we see out of this range a proper break and hold of the support at 25,000, then there's no real reason to doubt the fact that what we are seeing is the proper signs of strength out of the automatic reaction and resistance levels. And then that was the spring. This would have been the spring. So that's how you can analyze the Wyckoff accumulation phase in the Bitcoin chart today. So if you want more guides and videos from us, just check us out on YouTube, which you're looking at right now. So just go down below and press the subscribe button, and let's get this going. And then for the rest, you can read a bunch of our articles on Bullish, where we have weekly newsletter, which we post almost every week. We have articles about a bunch of things ranging from crypto to general finance to practically anything to do with financials, crypto. Then we have free resources, which include trading guides, free trading journals, trading courses, and if you just visit us there, then you can just download it all for free and get access to entire trading courses and any type of templates that might be useful to you as a trader, like trading journals. Without having to create one from scratch in Word or Excel, you can just copy paste what professionals already use. So that was the Wyckoff distribution patterns. And yeah, thank you guys.